Hey friends, today I will tell you about the weekly review that is from 13th to 17th of July, how the market reacted in the Nifty and the Bank Nifty, which sectors performed and underperformed, and what is the outlook for the next week. So we get into that. So Nifty, you can see Nifty closed at 24,334, up about 127 points or roughly half a percentage for the week, but it was a roller coaster ride. But on Wednesday, that is on 15th of July, a sharp sell-off due to US-Iran tensions came, and then we can see the crude. You can see crude spiked on on the coming week by around 15%. So from 71 to 85, the due to tensions, there is spiking crude oil. But here is the important part for us as trader is that the market did not break down. It tested that the Nifty tested its support around 24,000 to 24,050, and then on Friday, that is yesterday, on 18th of July, day before yesterday, on 18th of July, it delivered the biggest single day in over a month, up more than 1%, and it added 262 points in one session, driven by IT and banking stock. Plus, there's the results for the Reliance, which is supposed to come on Saturday. So the key takeaway is that as long as Nifty is holding 24,000 on a closing basis, the market is still looking bullish, and if the market comes down, the dips are being bought. Now we see the Bank Nifty. The Bank Nifty is where the real action is. Bank Nifty closed the week at 58,521, up around 0.8%, that is 476 points. And on Friday itself, you can see on Friday it gave a massive move up by gaining around 1.6%, more than 900 points in a single session. What is important technically is that Bank Nifty broke above 57,500 resistance zone, which has been moving up for a quite bit of long. That like from 12th of June, we can see from the last 1 month, it's been not given a good breakup. But here we can see a big candle where the breakup is seen. And this is not a bounce. This looks like a proper breakup. What is the trigger? The trigger is the Q1 earnings of the private banks. You can see the private banks, that is HDFC, ICICI Bank, Kotak Bank, Axis Bank, all jumped 1 to 4% ahead of their Q1 earnings, which are coming over this weekend. The Nifty Private Bank Index, see the Private Bank Index, it jumped over 2% over the whole week. For this big banks, Nifty low was 57286, and you can see Bank Nifty low was 57542, and high was 58596. So my view is as long as Bank Nifty holds above 57,500, the breakout stays valid, and any pullback if comes, one can buy. Now let's talk about sectors. This week sector rotation was very clear. The winning sector was IT. You can see the IT jumped around 1.75% on Friday, and which was the top sector for the week. And on the other side, the losing sector was pharma and metal. Pharma closed down 1.4%, and metal closed down 1.47%. So the broader market underperformed, and see the mid cap and small cap ended lower on Fridays when the market was up around 900 points. So this more was a large cap and heavyweight driven rally, not a broad based one. So what is the view for the next week? So the main big driver is the earning. This is a huge earnings weekend. HDFC Bank and ICICI Bank results will come on Saturday, that is on 18th of July. So the banking space and the Bank Nifty will react according to the earnings on Monday, that is of 20th of July. So Reliance results are also in focus. So first quarter of financial year 2027 season is now in full swing. So expect stock specific earnings driven moves rather than one direction moves. Second, the levels on the Nifty, the immediate support is around 24,000, with a strong support near 23,750 to 23,800, and resistance is seen at around 24,450 to 24,500. And if the Nifty closes above 24,500, it can go up to 24,750 to it can go up to 24,750 to even 25,000. So the broad range is roughly between 23,750 to 24,750. On Bank Nifty, The support is around 57,400 to 57,500. You can see the low of the big momentum candle is 57,542, and the previous candle low is 57,420. So the low, the stop loss will be around 57,400, and resistance will come around 59,900 to 60,000. So, and sustained move, if the Bank Nifty moves above 60,500, it can go up to 61,400 to 61,500, as you can see on in the February this year. This was a major swing high. So we expect the major resistance around this 61,400 to 61,500. India VIX has cooled down to 12 to 13 range, which tells us that the volatility is low and the bulls are comfortable. But if the crude from here spikes above, then this is a thing to watch out for, then everything can change. So my overall bias is that it's a cautiously bullish bias, and we can buy on dips as long as the Nifty holds 23,750. As long as Nifty holds around 23,750, we can buy the dips. But just respect your stop loss. And it's a earning season, so be stock specific, because if any single stock before results can move either way and after either way, so be stock specific during the earning season. So this is your market view for the week. And if this breakdown helped you, hit like, subscribe to Stocksmind, and share with your fellow members. Drop a comment which stock or index you want me to cover in the next video. I am Deepak Kumar Kanodia, SEBI research analyst. Trade safe, manage your risk, and I'll see you in the next video. And remember, Stocksmind, research to results. Jai Hind.